coffee imports entered the United States largely duty-free, but now some of America's top trading partners are facing double-digit tariffs on their imports, including coffee. That's true of Brazil, the largest supplier of coffee to the United States. Its exports now face a 50% tariff into America.
Through a break from tariffs, coffee prices are up 21% from last year. The U.S. imports most of its coffee from Brazil, a country under a 50% tariff. And today's price check, Susan Elizabeth Littlefield shows us how those numbers are trickling down to us.
President Trump's newest round of tariffs could make your morning cup of coffee more expensive. The White House just hit Brazilian goods, for example, including coffee, with a 50% tariff.
Every morning in the United States starts the same way for millions of people, with a cup of coffee. It's not just a drink. For many, it's the fuel that powers work days, study sessions, and long commutes. Coffee feels like a small comfort that never changes, something you can always count on. But here's the surprising truth. America doesn't actually grow much of its own coffee.
As an example, has been not good to us, not good at all.
Almost every cup you drink comes from somewhere else. Think about that for a second. The United States drinks more than 24 million bags of coffee every year. That's nearly 11 pounds for every single person in the country. It's a market worth billions of dollars, and yet the soil and climate here can't support that kind of demand. Coffee needs tropical weather, steady rain, and high-altitude farms to grow properly, conditions you won't find in most of the U.S. Sure, Hawaii and Puerto Rico grow a little, and some farmers in California are experimenting, but the supply is tiny. Those beans are treated like special luxury items, not the everyday blends that fill American grocery shelves. So where does all the coffee come from? The answer is Brazil.
Formula was a formula based on common sense, based on deficits, based on how we've been treated over the years.
For generations, Brazil has been the giant of the coffee world. Its perfect mix of geography, expertise, and scale makes it the #1 supplier. Roughly 1 in every 3 cups of coffee poured in America has its roots in Brazilian soil. That means when you walk into a diner, pick up a cup from a gas station, or order a latte at a cafe, there's a good chance the beans traveled all the way from Brazil. Brazilian coffee, especially Arabica beans, has shaped the American taste. It's not exotic or rare, but it's consistent, smooth, and affordable. That reliability is what makes it so important. Without it, the morning routine in America would look completely different. But here's the catch. Relying so heavily on one country is risky. When almost a third of your entire supply comes from a single source, any problem, political, economic, or environmental, can shake the entire system. And that's exactly what would happen. The US thought its size and buying power gave it control, but in reality, that dependence was a ticking time bomb. And when Washington made one bold move in 2025, the weakness at the heart of America's coffee supply was exposed for the whole world to see. In the summer of 2025, the US government made a decision that would change the coffee world overnight. Washington announced a 50% tariff on Brazilian coffee imports. On paper, it sounded like a move to protect American interests. The idea was simple: make foreign coffee more expensive so US buyers would turn to other options, maybe even boosting smaller domestic growers. But the reality turned out to be very different. The problem is that coffee isn't like steel, cars, or electronics. You can't just shift production back home or find an easy replacement. The US doesn't have the right climate, and other suppliers couldn't step in fast enough to fill the gap. Brazil had always been the backbone of the American coffee supply. Without it, the system wasn't built to cope. The results showed up almost instantly. Within a single week of the tariff taking effect, US imports of Brazilian coffee dropped by nearly 20% compared to the year before. For roasters and distributors, that missing supply was a nightmare. They depended on those beans to keep supermarket shelves stocked and cafes running smoothly. Suddenly, their most reliable partner had become too expensive, and when supply shrinks, prices go up. A pound of ground coffee that cost about $6.90 earlier in the year shot up to more than $8 in just a few weeks. In places like California and New York, the price tag jumped past $9. That may not sound like much at first, but for families who buy several pounds every month, the increase added up quickly, sometimes $40 or more per year. At a time when groceries, rent, and energy bills were already climbing, this hit hard. Small businesses felt it the most. Independent cafes and local roasters run on razor-thin margins. When distributors raised their prices by 30 to 40%, many shop owners had to make painful choices. Some cut their hours, some laid off workers, and others experimented with cheaper beans from countries like Ethiopia or Vietnam. But customers noticed the difference in taste right away. Regulars who came for that smooth Brazilian flavor weren't impressed by substitutes, and loyalty built over years started fading in weeks. What Washington thought would corner Brazil actually backfired. The tariff didn't make American coffee stronger, it made the US weaker. It pushed the world's top coffee supplier to look elsewhere for partners, while leaving Americans with fewer choices and higher bills. But Brazil wasn't about to sit quietly. Instead of giving in, it made a bold move that would flip the entire situation upside down. When the US tried to squeeze Brazil with heavy tariffs, many expected Brazil to back down. After all, losing such a massive customer should have been a serious blow. But instead of folding, Brazil flipped the situation on its head. It didn't beg Washington for deals. It didn't scramble to offer discounts. Instead, Brazil looked around and asked a simple question: who else wants our coffee? The answer came quickly: China. China has been experiencing a coffee boom for years. In big cities like Shanghai and Beijing, cafes are packed with young people swapping traditional tea for cappuccinos, lattes, and cold brews. Coffee culture is spreading fast, and demand is exploding. So when Brazil suddenly had extra beans to sell, China opened its doors wide. Licenses were granted to more than 200 Brazilian companies almost overnight, and the two countries began sealing deals that would reshape the global coffee trade. But China wasn't alone. Europe saw the opportunity too. Germany, one of the biggest coffee importers in the world, signed contracts with Brazilian cooperatives that once supplied American roasters. Across the European Union, importers realized they could lock in long-term stability without getting caught in Washington's political battles. To them, Brazil wasn't a problem, it was the solution. The shift spread across Asia as well. Japan and South Korea, both home to booming coffee markets, wasted no time securing more Brazilian beans. They knew they couldn't risk shortages or sudden price hikes. By partnering directly with Brazil, they ensured their coffee culture could keep thriving while Americans were left struggling with higher costs and fewer options. This was the turning point. For decades, the US believed its massive appetite for coffee gave it power. If America wanted beans, producers would always line up to supply them, but Brazil proved that wasn't true anymore. By finding new partners quickly, it showed it could thrive without relying on the United States. The balance of power in coffee had shifted, and Washington suddenly found itself on the outside looking in. Meanwhile, American coffee drinkers were paying more for a product that was once cheap and plentiful. At the same time, consumers in China, Europe, and Asia were sipping cups brewed from the very beans that used to fill US shelves. The roles had reversed, and Brazil came out stronger than ever. And just as America's position was slipping, its closest neighbor spotted an opening and quietly turned the coffee crisis into its own victory. While Washington was busy turning coffee into a weapon of politics, Canada quietly chose a different path. Instead of joining the trade war, Ottawa kept things simple: no tariffs, no drama, no big speeches. Brazilian beans kept flowing north across the border without interruption, and that one decision gave Canada an advantage it had never had before. When US demand collapsed under the weight of tariffs, Brazil needed new buyers. Canada was right there, ready and reliable. In fact, Canadian imports of Brazilian coffee had already been rising even before the crisis, climbing more than 7% in 2024. So when American buyers pulled back, Canada stepped in naturally. Brazilian suppliers redirected shipments, and within months, analysts were predicting long-term contracts worth billions. For Canadian consumers, the shift was almost invisible. While families in New York and California watched their coffee bills spike, shoppers in Toronto and Vancouver kept paying the same prices they always had. The blends didn't change, the shelves stayed full, and small businesses didn't panic. Canada had become one of Brazil's most dependable partners at the exact moment the US lost that role, and the ripple effects were huge. Take Tim Hortons, for example. As the most recognizable coffee brand in Canada, it serves millions of cups every single day. Thanks to steady Brazilian supply, Tim Hortons didn't have to hike prices dramatically or scramble for substitutes. Other Canadian roasters and specialty brands thrived as well, from large names like Kicking Horse to small boutique shops. Some even saw an opportunity to push into the US market. That's right, while American roasters were struggling to source beans, Canadian companies started selling directly to US customers online. People in the States, frustrated with high prices and weaker blends, began ordering from Canadian websites. It was a quiet reversal of trade, with coffee flowing south instead of north, and it highlighted just how badly the US had fumbled its position. For Brazil, the benefits were obvious. Canada offered stability, predictability, and a market where coffee wasn't tied to political fights. For Canada, it was a chance to strengthen its place in the global coffee trade, gaining respect and influence it had never enjoyed before. By doing almost nothing, Canada gained everything, and by trying to pressure Brazil, Washington ended up handing its northern neighbor an unexpected victory. But the story didn't end there. The shockwaves of America's tariffs stretched far beyond North America, reshaping the entire global coffee market in ways no one saw coming. The ripple effects of America's coffee gamble didn't stop at its own borders. The decision to slap tariffs on Brazil shook the entire global coffee market, sending shockwaves through every continent. What started as a US-Brazil standoff quickly turned into a worldwide lesson in just how fragile this industry really is. Coffee isn't like other commodities. You can't just increase production whenever demand spikes. Coffee trees take years to mature, and harvests depend heavily on rainfall and temperature. So when the US tried to squeeze Brazil, the message to the rest of the world was clear. If Washington was willing to weaponize coffee trade against its biggest supplier, no producer was truly safe. Nations like Vietnam, Colombia, Ethiopia, and Indonesia, together making up most of the world's supply, took notice. If Brazil could be targeted, so could they. This fear fueled a surge in the futures market. In New York, Arabica contracts shot up more than 34% since June. In London, Robusta prices soared by 56%. These weren't just numbers flashing on traders' screens. They translated into higher import costs for roasters and higher prices on grocery store shelves across the globe. For farmers, the rising prices brought mixed emotions. On the surface, higher prices meant better income, but instability is dangerous. It makes planning nearly impossible. Farmers can't expand their fields or grow new trees overnight. Processing facilities and supply chains can't magically appear. So instead of stability and growth, they faced risk and uncertainty. Would the US target another country next? Would the entire market collapse under the weight of politics? Meanwhile, trust in America as a trade partner began to crumble. In global commerce, trust is like invisible currency. It's what keeps deals flowing smoothly. But after the tariffs, many nations started to wonder if the US could be counted on. Why sign a long-term deal with Washington if it could be ripped apart overnight by politics? Instead, countries like China, the EU, and Japan began positioning themselves as safer, more reliable buyers, and the effects trickled down to everyday people. In Europe and Asia, consumers enjoyed stability thanks to fresh contracts with Brazil. In Canada, prices stayed steady because the government never joined the trade war. But in the US, families had to make tough choices: pay more, switch to cheaper beans, or cut back altogether. Something as simple as a morning coffee suddenly felt like a luxury. The question now is bigger than just coffee. Has the US permanently lost its grip on one of the world's most important commodities? Or is this just a stumble in a much longer battle for global influence? One thing is certain, this fight is far from over. Coffee may seem like a small part of daily life, but this crisis showed just how powerful it really is. What began as a simple tariff turned into a global shakeup that changed who holds influence in the coffee trade. Brazil proved it could thrive without the US. China and Europe gained stronger ties, and Canada quietly rose as a surprising winner. Meanwhile, American families faced higher prices, struggling businesses, and fewer options on the shelves. The bigger lesson is clear. In a world as connected as ours, even one decision can spark a chain reaction across continents. The US thought it could control the market, but instead it exposed its own weakness. And the real question now is, can America ever win back its place at the coffee table?